Welcome to the Investor Impact Power Talks with Vinney Chopra, where investors gather to share their insights and strategies in the world of multifamily, real estate, and beyond. Get ready to be inspired and equipped for your next level of success.
This is Vinney Chopra. Just to mention again, I'm really excited you are here with me, and it's for accredited investors in these uncertain times what to do. And just to talk about, let's just close this up over here and here. There we go. Again, welcome to this exclusive seminar. I do give these seminars on Eventbrite, quite a few different ones. Again, this webinar is for entertainment, educational purposes only, and should not be considered as legal accounting or investment advice. We are not selling any security or any PPM or anything. And please do consult with your own attorney, financial advisor, CPA for legal matters and things like that. Just a little bit about me. Some of you might know me or you have seen my profile at vinneychopra.com. I'm a mechanical engineer, came from India with $7 in my pocket and some dreams and arrived in USA. Then MBA, I came to do my MBA, Master's in Business Administration, right there. Motivational speaker, fundraiser, became a broker in California. I live in Danville, California, right here in near to San Francisco, and started lots of groups, companies, and started from a humble beginning selling books, Bible, and encyclopedias, 3 summers, and to earn my tuition. So hard work has been in my blood. And then I founded several companies and took the portfolio from $7 in my pocket to over a $1 billion in assets under management, where I am the principal and everything. Not too many partners. We are a boutique company. Again, right there, you just saw that. My husband, I've been married 45 years with 2 children, Neil and Monica. That's why our company's name is Monil, Monica and Neil together, and so forth. 42 years, all these single family homes. Some of you might have already been investing in single family in duplexes, but then I got into hotels and senior livings and apartments and things like that. So we'll just go a little bit quickly. And if you want to even follow, you might know me. I have a podcast also, which is top in the nation, and mindset show. I just did it live mindset, abundance mindset, and Winnie and Bo show tomorrow. And I have written 3 books also, audio and paperback and everything. If anybody's interested, hopefully you could find them over there. I'll give you these also through at the end of the webinar. If you stay all the way along, then you'll be able to get that also from me. Let's see here. I'm just trying to see that everybody. Hi, Jill. Nice to have you. Thanks for coming in. Everybody, Asma will let you in there. So let's just talk about what's today's economic landscape. Boy, persistence inflation. Inflation looks like with the tariffs now, it is going to even creep up more. And then rising interest rates. Are there going to be cuts? There are supposed to be. The uh, experts say maybe in June we might get a cut 0.25, maybe another 0.25 later on in there, but nobody knows. Nobody knows. Market what volatility is there, increased price swings between, as one day stock market is up, one day it's down, and geopolitical tensions are there huge with tariffs with different countries, and China definitely, as you all know, quite a bit having the trouble to get them to come up with the, oh my gosh, I don't know what's going on. Okay, there we go. Again, the accredited investor advantages is that you are, if you have 500,000 liquid or 1 million liquid net worth of $1 million or more, you have access to investments unavailable to retail investors. That's the good part in having liquidity in this market. Powerful networks, connections to deal flow and expert insights and capital reserves, financial stability, and investment sophistication. That's the biggest thing. All of you are joining today because you have a much higher level of knowledge and also experience to evaluate complex opportunities. So hopefully that's what I'll be talking to you a little bit, and hopefully share with you certain things which I'm finding going from multifamily, which is red and bleeding, into some asset classes which are really making good cash flows. So hopefully you will ask me some questions towards the end of the presentation and so on that. So asset allocation is big, correlational management, geographic exposure. You don't want to put all the eggs in one basket. I always say that. And also the time horizon. Are you looking at short term, medium, or long term investments? And depending on the liquidity and where you put the money in, right there. I don't know why again and again it just doesn't. Okay, private equity, growth equity funds. I'm sure there are lots of different investments out there. If you are on the social media, so many people are saying, oh, yeah, get 15, 20% annually, 2 to 7 year horizon. I see that so many ads put in on Facebook and Instagram all over the place, acquiring controlling stake in mature businesses is venture capital. I've been also investing in venture capital for many years. That's something, if your profile is that, you might be looking into investing into those. But real estate is where I find the leverage comes in. The leverage is big thing and tax advantages. And the other part I like about real estate, hopefully you do too, it doesn't go to zero overnight. If you buy in the right areas, the multifamily also, I bought so many doors and we were able to increase equity gains is the word by value add and everything and made extremely great returns for investors. But right now, I don't know if you have invested in some deals which are not cash flowing, but that has been a troublesome in the last 2, 3 years and so on, with insurance costs going high and rate locks not being there and things like that. Industrial really big, by the way, with the e-commerce growth right now. I hope you are able to look into logistics and the industrial sector, which I am also looking into that, by the way. I'll be learning and teaching as we go on. Some of my very good partners and friends, they are into industrial and they have done really well. Healthcare properties. Now, that's something I'm going to talk about today, which we'll talk about, and also the tourism also we'll talk about. Opportunity zones, tax advantages are there, but I've shied away from opportunity zones because they are the depressed areas in any metro area where you get taxes and all, but you don't know how other people around there will be putting money and how the development is going to come and so forth. I just stayed away, but it's your risk profile will let you look into that. Of course, private credit is not bad, not bad. Being a bank is a good thing. If you find some people who are able to, that you can vet the deals and direct lend to people through your IRA or retirement plans or like that, not bad at all. If you know the people and they have good track record, that's the key. That's the real key. Real estate debt is not bad at all. Again, mezzanine senior loans secured by the qualified properties. You want to make sure you are right behind the senior loans, senior debt, then your debt, then comes their investors and so on. So the real estate debt or yield, I call it, is pretty good deal actually. As a matter of fact, we are planning right now with a good solid returns. Again, I'm not selling any security. If any one of you or people who are watching it later on, they want to reach out to us, to me, I explain like we are giving like 10%, 11%, and 12% hard pref, we call it. What that means is it's a you get 10% net. It's not like you get 10% and then you are in the 30% bracket. Now you take away 3% to taxes for Uncle Sam, you are left with only 7. What we will do, we'll be giving the cost segregation accelerated depreciation negative so that your 10 is real 10. That's the beauty of it. So, in other words, 10% net is equal to almost 13% getting from somebody else, and it will be paid out monthly or quarterly, like there. And then 11% will be net 11, and 12% will be net 12. So, actually, if 12 at 30, 40% is like 4%, so it's 16% you're making, but finally you're taking 12% home. That's something I just wanted to explain that a little bit. Distressed debt, now that's purchasing troubled loans. I just don't like that. You could lose all your money and things like that, but it all depends where your risk profile is. But there are so many places where you could invest your money to make money. I call it velocity of money. For accredited investors, it's so important that your money is not sitting in one place, but you are putting them in different, streams of income where it's growing conservatively, of course, with finding the right operators and putting it with them. Specialty finance, big one, niche sectors like litigation finance, royal, I don't know. Again, that's something. Hedging strategies for uncertain times, option strategy, puts and collars. Some of you who are joining me today, maybe you're really great at it. I'm not. I'm not good at that at all. And precious metals, I believe in precious metals, and I know gold has just skyrocketed. You all know that. And silver also is very strong right now as a portfolio insurance. So the key thing I find in talking to my very wealthy investors, I've raised over $200 million. What? My investors have given me, accredited investors and sophisticated investors have given me over $200 million where I have bought these real estate deals and everything. I have not put their money in these things at all, but mostly real estate because I like real estate in the sense that you could really invest like 100,000 in it, but if the LTV, loan to value ratio, is like 70/30, you are controlling 3 times or 3.5 350,000 for your 100. So it's like you're growing your money by controlling larger leverage portion. And when the increase happens, the bank or the lender just takes their payment of the loan back, balance of the loan, but they don't take any equity gain from us, from you, from the investors, or from me, general partner like that. I love that. So the leverage deal is a better deal. Good good debt is good debt. Bad debt is not good debt, but good debt where it can grow and everything is pretty good. Volatile, VIX and all that, I don't believe in. Leverage tax advantages again. I mentioned about 1031 charitable. This is a good one, the middle one, by the way. We bought this hotel, just to give you an example, in Texas for 6 million and it went to 12 million. Wow. We were able to manage it so rightly and everything, increased the occupancy, value add. And then we sold it right there, I think in 2023. And then from 1031, profit we made like 6 million. We were able to take that, convert it into another hotel and not pay any gains. So that's the one over there, of course. And then alternative and worth considering all that. And Bitcoin, Ethereum, you all know, if you're into that or you feel good about it, yeah, I know it's increasing. Bitcoin has gone from, gosh, what, 69,000 to right now 96 or 97, I saw today. But it's all up to you. But let's come back to where you might be interested in looking into. Okay, this is the crust of the thing I want to share with you. Silver tsunami is a big one. And what that means is 10,000 baby boomers are turning 65 every night, every day from 2011 to 2030. They'll be all the baby boomers, 74 million of them, will be seniors. Baby boomers will be turning seniors. And that's where you may like to look into these deals where you are investing into the seniors. It's feeling good investments and doing right also for the seniors, but the cash flows are really humongous. And I'll show you how and so forth. But please ask me questions also, and we'll just talk about it. 65 and plus, look at this here. Like we are right in the middle here, 2025. So we are right at about 60 let's say 62 million, if we just brought it in the half, that's going to become almost 98 million. Look at that. So the senior population, the darker green, is going to keep on increasing in the next 35 years. And then this one, the green, the lighter green, is the 85 plus. So actually, there will be a lot more, almost 300% increase in the 85 plus population. And with all the medical help and everything, people are living longer and they will need assistance. So as they get to be in the 80s, 85, 90, they need assistance. So that's where I wanted to get your attention, everybody attending or watching it even later on. The RAL, actually, this is called residential assisted living right there, and memory care, that's in the middle portion, right over here where its state licensing is required and the medication is taken care of, patenting assistance, care service, private pay, all that, and then closely monitor in the memory care dementia. Some of the statistics are pretty bad. They are saying like 1 out of 3 will get memory loss or dementia in their lifetime. That's pretty bad, but that's where it needs more closely monitoring, special activities, and so on. That. So that's what I have been finding a lot of good cash flow in the middle sector. Of course, there is cash flow to be made here also. It's just that these are age restricted apartments and independent living, and this is skilled nursing. A lot of businesses are here with rehab centers, medical services, nursing homes, and that's a good business, but it's very treacherous, very complex. I'll just say that. But let's talk about this one. This one is amazing. Inflation resistant investments, which I wanted to get everybody to really look into. I stopped doing traditional multifamily, by the way. I'm the one who were buying 4, 5, 6, sometimes even 7 multifamily properties a year. Then I saw writing on the wall about 4, 5 years back that, hey, the cash flow is not there. And people were overpaying and overpaying. New investors, new syndicators were overbidding. And I said, I got to get out of there. And I sold my assets at peak very nicely, thank goodness. But then when I stopped that, my results skyrocketed. Senior living is really cash flow with a purpose. It's strong cash flow with a purpose also that you're helping the seniors feeling good about the where you live in your backyard. So one boutique 10 bedroom home, single family home, by the way, delivered 2 to 3x higher NOI than multifamily. It's mind blowing. And you're able to fill with the demand is so high. When I show you some numbers, it's 90% occupancy in senior living. And the best part is, I think I have some slides to show you, and the premium rates for premium care. Average rate is $5,000, 5,200, I think, per month that the seniors pay to live in the single family home, 10 bedroom, 6 bedroom, 7 bedroom, whatever it is. But then you give them care and food and cook to order meals and all that. And the families and the residents, they love it. They loved it. Profit meets purpose, and that's the future. It really is. So let me give you some statistics. Senior living industry, 94.2 billion average revenue. This like a couple of years back. It's growing like crazy right there. And the median annual cost of assisted living right there. And then 70% of the seniors who will need some kind of care in their lifetime. And then these are the total number of assisted living communities in US, almost 30,600, but the distance is big. As you see in this next graph, the demand trend is huge. If we keep over here in the same format, keep on growing in the same pace for the next, like we are right here, right about here, I think 25 to 2025, 26 over here, then 30, look at the gap, then 34, look at the gap, and the big supply shortage is coming. So that's why we want to get on the bandwagon. And the population of 80 plus population forecast is going to keep on increasing. So this is a beautiful chart. I hope you will take a picture of it with the camera or something. That's a good one. If you need this presentation also, please let us know and we'll provide you that too. Building your roadmap to financial freedom. The biggest thing is that we love the senior housing because non-working class, they have already worked and really enjoying their golden years of life, I say. Zero concessions, zero delinquencies, zero deferred maintenance because we are renovating these homes, single family homes like that, and very low turnover because once they like that community, they want to live there for 3, 4 years until they they heavenly abroad, and high satisfaction of making a difference in the lives of our seniors. That is huge. That is huge. Again, stable and reliable cash flows of almost like 10,000 to 15,000 per single family home per month. That's the typically you could keep as the net income right there. Occupancy levels 50. I know it says typically generate substantially monthly income right about there. Then 45 to 95 occupancy because demand is there, and net profit margin really strong. Strong. Cash on cash is huge, like 30% and something. I why did my team put it over here, ladies? 70% of the assisted living communities have ladies in there. 70% are ladies because they survive when the husband passes away, things like that. So it's really serving a noble cause, where you are giving back to the community and community contribution, and you're giving a great life of dignity and safety and everything. I just wanted to share a couple of things here. We bought these two homes right there in the Phoenix area, and they are doing really well. We were able to get them decorated, as you can see, very nicely right there. And now we are so pleased that within few months we have, I think, 50% occupancy. It's going to be 60, 70, 80, then 100%. That's the backyard. So these are the residential assisted livings we are talking about. Residential. Any questions? Huh? Asma, maybe you could unmute. If anybody's got there, raise your hand if you'd like me to answer any questions. Please let me know. Please let me know. Hmm? Any questions, please put it in the chat also. But the big thing is you want to give good quality residence to the seniors to live and really enjoy being in your home. That's the beauty of it. Look at how beautiful it is. Our again suites and things and dining room, and our caregivers cook really great, cook to me. And then we have a really nice video also here. We can see it. By the way, I've been making them ground up centers, assisted living centers, but it was taking me 2 years to make one. 2 years to make one. So I just decided a few years back, I said, you know what? It's a long game. They were nice and I built them and sold them. But the big thing is movie theater was there, spa was there, hair salons, game rooms, sunrooms, library, really nice things. Look at because there are like 100 seniors in this particular five-star thing. But I find with investors like you, accredited investors, you could invest with me or with anybody, good operators, where your money can make more money for you. But senior living is one avenue. I hope you will look into it. Make it a note that you want to look into for good cash flow. You might like to dig into this category right there. See, these are all the things that I was standing there under a tree and then we built this whole thing from scratch, but it takes a lot of time. Lot of time. By the way, so let's just open up for questions and answers, and then I will take you to the next presentation right after this one, where it is cash flowing very big there also. But you can reach me at cell or the text 925-766-3518 or email Vinney at monilig.com. That's Monil, our company, iginvestmentgroup.com for accredited investors only. Fill out the form. If you would like to really even find out how our other investors feel and all, please go to vinneychopra.com invest. Then you could fill out the form and then I will get in touch with you with my team and everything. Also, I promise you those 3 books and for staying through the webinar and everything. So if you go to vinneychopra.com, free book, you will get all the 3 books over there. And there are other places there to follow me on my different channels and things, and also my podcast and things like that. So I don't know what's after this one. Let's look at it. Structured notes. No, we don't want to go there. But let's go to any questions. I'll just come back here to stop share and see how are we doing. So thank you so much. I want to acknowledge everybody who's here. Hi, Craig. Nice to have you. Michelle. Hi, Naga. Hi, Asma. Bill. Jay. Hi, Jay. How are you? Nice to meet you, Jill, again, and Judy, and Michael, and Mitu. Hi, Mitu. So glad to meet you. I know you're moving, you had mentioned. And then Rama. Nice to meet you also. So please, if you will, go ahead and uncheck, mute. Oh, wow. Did we give permission to everybody to ask to talk? Okay. Yeah, if you would, please go ahead and let's give everybody so that you could ask us any questions that you may have. I'm sorry. We usually give it out, allowed to talk so that you could ask us any questions. There we are. There we are. So I think everybody is muted. If you have any questions, please go ahead and put it in the chat. I do. Oh, there are some questions. Thank you so much. Right there. Permitted, right there. Hi there. Nice to meet you. Right there, Michelle. Nice to meet you. The presentation will be emailed you after. Thank you. Yeah, we will do that. Sure. Judy, awesome. Thank you. There we go. Hi, Vinny. Been a long time. Nice to meet you, Judy. Back again. So good to meet you. And then thank you for this presentation. Appreciate that. If there are any questions, let me go into the next part of my presentation and let me open up my this over here. My another presentation was into hospitality. So I think it was right there, if it's not too far away. Why invest in hospitality? So let's get into this one. And I do want to share with you. See, the thing is, Vinny, I've been in real estate over 40 years, right? And every time I made decisions looking at the landscape, economy, and also keeping my investors' interest at heart, because their preservation of capital is the foremost, and growing their capital that they give me in syndication or fund managing. I've done 42 different packages, PPMs, and funds, 42 of them, and given respectable returns from 18 to even highest of 45%, I remember, per year. I've given certain good deals you come across. I just mentioned about that hotel. If you join a little later on, we bought this Hilton Garden Inn, actually in Texas, for 6 million. And then the good part was, bad part was COVID hit, but our occupancy went way down. But we are very shrewd operators, right? Managers. So we were able to talk to our leasing people. We asked them to talk to doctors and to the nurses of the hospitals in that town. And guess what? Because we were calling on them, they chose our Hilton Garden Inn to stay and be away from family through the week, and then they'll go back to family over the weekend and so on. So our occupancy went way up. That property, which was making money in 2020, they grew so much revenue and so forth that its value went to, we refinanced it also, and then it went to 12 million. So we made a profit of 6 million, and we took portion of that, 5,330,000, I think. We took it from there and we bought a Wyndham Garden trademark, very beautiful hotel over there in the same town. Actually, I know there is another deal coming on my table, very good deal, which is like, gosh, I think I can buy it for almost 2x the revenue. What? That's mind blowing. No, I said that wrong. I think 4x the revenue, but still, it's pretty darn good. But let's talk about it. I really believe if you would like to look into another aspect where you make money, I know a lot of people I know who are into Airbnb. Which is also hospitality, but it's a different thing. It's a single family home which you are giving, or a resort type of glamping is another one, and so on. That, but some restrictions are coming in that space, as but hospitality, hotels, boutique hotels, and our main idea about hospitality in the last 5 years have been to really stay in the mid-tier hotels, but with Sheratons and with the Hiltons and the IGT intercontinental groups, all the major ones, because then the occupancy stays pretty strong and they have a good system to get the travelers come to their website and all that stuff. And anyway, so let's look at it. Hospitality record breaking industry projections for this year: 777 billion in guest spending expected. That's a good number. And then 94% of the investors increasing hotel investments. The attitude, the mind thinking is very strong with the investors right now to invest in hotels in good locations. Of course, locations. I like busy airports. I like central business districts where there is a more tourism, and then also like the tourist spots also right on the beaches and things like that. Strong recovery trend since pandemic. Strong, really strong. So 7 7, we talked about that. The RevPAR is revenues per average room growth of almost 2 to 5% expected nationwide, and investor confidence is pretty high, and it's maintaining and increasing as we go on. And you could see that the guest spending from 2024 to 2025, it's believed to be going. And I think there's another graph where you'll see it's just gone for after COVID. It went down, of course, in COVID, but after that, it's been steady growth, and that's what we look for the hotels. And again, luxury properties, highest investor investment. I think people are able to afford more and things like that. So that's one. Mid-scale hotels is where I like to be right here, and extended stay. These are my two main ones right there, where all the things I'm looking at a portfolio of 5 hotels right now, and it's very exciting where the PIP is actually called capital improvements. Money is there in those deals, and we are underwriting them and so on. Again, I'm not selling any security, but if you're interested in looking at some deals that my company is putting together, I'm putting together, please reach out to us, and or go to vinneychopra.com/invest. Fill out the form and let us know you're interested in senior living, or you're interested in hotels, hospitality, like that. So extended stays, I love them. I love them. And then mid-scale hotels. Now, mid-scale hotels also, I'm looking at even changing the flags. What does that mean? It means that you buy the hotel who's really doing great, cash flowing right now, but you change the flag to a higher level. By changing the flag to a higher level, the revenue per day, the RevPAR number goes up. That's the beauty of it. So we are hunting right now. If you have some leads, or some people want to sell their hotel, but don't tell me a lot of them, but they need to be cash flowing right now in a good locations, please reach out to me and my team, and we could talk to you, because we are on a spree to probably invest $50 million in the next few months, actually, to buy these great deals. Just to let you know, a great deal right now, we just put a offer last week, 500,000 non-refundable. It's such a good deal that we wanted to buy that in the Dallas area, by the way. And Dallas is one of the top locations, by the way. New York, San Francisco, and Dallas. What? Couldn't believe that. I was in Dallas about a month back, let's say, meeting with my partners and touring some hotels and things like that. It's just crazy out there as Frisco and Colony and the Prosper area, all that area is growing like crazy. There'll be like another Dallas, north of Dallas, actually, what I hear. It's going to be beautiful. But guess what? We are finding this property. I think we put an LOI at 14.5 million only, just a beautiful hotel, and with some renovations of 2 million, 2.5 maybe. It will be worth in next 3 years $28 million. $28 million. So by having the network of great operators and all these owners lists and everything, my partners and I are able to crush it to find the best of the best deals on our plate so that we are able to underwrite them quickly and put them into, we just toured the property and put an offer next day.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? You know, I wrote this book a few years back, Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
So it's mind-blowing, what can happen if you work with a good operator. There are a lot of people out there, just not me alone. But why hospitality investment? Perfect market timing. Post-pandemic stabilization is creating buying opportunities. Travel boom is here. People are getting out there. Business, international travel. I know with the tariff, I don't know how it's going to come, but let's just see. Hopefully it's going to stay there and tariffs will be settled soon. Major events, that's the thing. World Cup, Olympics, driving future demands, and more hotels are being built also. When new hotels are built, the older hotels get a push also. That's the beauty of it. We're looking at a hotel in Las Vegas Strip right now, where it can be just cash flowing like crazy. And we are changing the flag of that from where it is to next level. And that's going to be a humongous opportunity there. Favorable valuations. See, that's the other part. Properties entering market at attractive prices. So that's the real reason Vinney is so excited about hospitality, about hotels. Again, big things are coming. Tourism returns, 25, 26, sci-fi is there, World Cup, multiple cities. Then 2027, corporate travel reaches new record highs. Then Olympic Games in Los Angeles, that's coming up here. So why do I like hotels? Let's talk about that. Cash flow analysis, hotels and other real estate. I love the fact that daily rate adjustment. See, I've been a multifamily guy, apartment guy all my life, right? From single family to apartments and then to senior living now and hotels. But in the multifamily, you are working with the working class people, clientele, and you have a 6 month lease. It's fixed whatever it's 750, 850, 950, 1400 a month, whatever it is, it's locked in. It's 6 months or 13 months or 9 months leases. You cannot increase the rent at all. It's fixed. It's long-term leases. But here in hotels, it's daily rate adjustments depending on the location and the demand for that night and occupancy, everything with the AI tools fluctuation of these the daily rate happens 4 5 times 6 times every night so that you are able to maximize and when that's the daily rate adjustments right there as compared to fixed rate. So it's like that. The other part is that the residents for the hotel pay upfront. They pay up front and then they are living, spending great night, 2 nights, 5 nights in extended stays, which is amazing. I love that extended stays. And you have to keep upkeep is less. The whole program is much less avenues in reducing the expenses. That's what I wanted to say. And daily rate adjustments, they pay them, right? Their credit card or things like that. And then you are able to have them stay. Multiple revenue streams. Now that's a good one. See over here, it says limited revenue streams in retail or office space or wherever. You could put other places to storage units, whatever, mobile home parks, yeah, everything over here. It's the same limited revenue streams. You can maybe get RUB system, bill back system, electricity, gas, utilities, bill back, we call it, or increase in rent after the lease expires, of course. But multiple revenue streams over here can be coming from spas, from hotel, from butler service. Like we are building this romantic getaway in the peninsula right there near to Pensacola, Florida, Biloxi. This has become like second Las Vegas, by the way. Oh my gosh, it's amazing. We are building a boutique hotel. It's called Hotel Rain. Some of you might have seen my presentation, and it's going to be $700 per night. $700 per night with butler service and food and others and all. Very beautiful romantic getaways and all that. So there are all kinds of streams of income. Of course, you can have the what you call it breakfast and all, and then different avenues of incomes with the spa package and what's the other one? Others, I'm trying to remember now. I know some hotels we have gone with, there are lots of retail shops in there so that you get money from them also. Inflation hedge capabilities are there because with inflation, you increase the rent also, and dynamic pricing based on demand. That's the I was mentioning about the daily rate over here. You could do the dynamic pricing. It's static pricing over here, whenever to inflation right there, because how much can you really charge rent wise in certain areas in USA? It's regression of rent. Actually, you have to lower the rent because a lot of new products came on board in on multifamily side. Actually, some of the build to rent and those kind of developments, I didn't do any, but they have to give 3 months, no, 2 months free rents and so on that. But oh, this was the one top performing markets. I do a lot of studies, lots of different things on a daily basis, and we found these three cities. Wow. New York City, highest investor interest right there in New York after COVID and all. It's growing. Second most attractive market, San Francisco, in my backyard. I live 30 miles outside of San Francisco here in Danville. It's sitting in my backyard here. Nice outside. And then Dallas is the third most sought after investment location, Dallas. Of course, there will be other opportunities too. I'm not just saying just these three will be the only ones, but they are coming on the top with interest level and where the economy is growing and things like that. Let's look at another one. Consumer behavior shifts, the basic functional stays right there, enhance experience. amenities. You can add so many amenities, and people will pay for that. Memorable moments, shareable experiences, personal identity, value based selections, the RevPAR growth. Look at that. I was mentioning urban hotels are huge, as you can see here. The resort destinations, I love those two right there. CBD, that's where it is. The central business districts, lots and lots of tourisms like to have in the central business so that they could see the attractions by walking and by going to with less transport headaches and things like that, so on. So that is the number one. As you can see, it's really grown a lot. So those are the few locations. Just to go back again, resort and the central business districts and tourism spots, inbound growth, international tourism. I don't know how it's going to affect and everything, but maybe we'll just skip this slide. Technology as a growth driver. AI is going to be helping so much in upkeep, in taking maintenance calls, and making sure the consumer experience is the best experience ever in hospitality. So AI integration is becoming revolutionizing the efficiencies of operations and guest servicing, the number one. And then reducing the overhead costs of the management. Why not? And smart systems with the guest experience through personalization to each and how it is when you walk into the hotel room, the TV greets you and things and all that stuff. Of course, we were talking about diversification of revenue streams in the hospitality. Hotels now can generate so much by giving the, of course, weddings and things like the one we bought, Casa. What's the name of that property in Texas? Casa Villa, Casa Dimar, I think, 165 units. It's got beautiful meeting rooms. Weddings happen every weekend. It's got fountains and all that. It's just beautiful, nostalgic hotel that we bought, and we are thinking to sell it. I paid 13 million nine. We paid 13 million nine, and actually 4 million was the renovations already done in that hotel, by the way. $4 million. So my cost was only 9 million something, and we are ready to sell it. We just bought it last year. Did we buy it last year or 23 end, maybe, whatever? So in just 2 years, it's grown from 13 million nine to I think 20 million. 20 million. Wow. It's mind blowing. It's 100% occupied, by the way. 100%. How do you get that? Because we have some contracts with the airline pilots and all, and also the some other contracts where they have given us a full carte blanche at a little bit lower rate, but whether they are filling the rooms or not filling the rooms, you still get paid like that. Then the spas and gift shops, like I was mentioning, meeting rooms and what you call it, conventions and meetings and all that. So there are different revenues. Most profitable hotel. I think we did talk about that. It's the same thing. Traditional management contracts. We usually like to have big franchises, like I said, Hilton and Marriott's and the IGTs and Intercontinentals, all those and management contracts. We have full control of all our hotels. That's the beauty of it. So I think that's pretty much right there. Again, let's just come back here. It's almost towards the end of the hour. Love to give any kind of answers that you might have. I really appreciate your joining today. And please ask any questions right there on the side, or if you would like to unmute yourself and ask questions, I'm right here for you. So, anybody has hands up, love to answer that. Do we have any questions? Asma, anybody has any questions? I hope I did.
No, not
Uh,
that I can see.
okay, thank you so
Guys,
much. I
if you
was
have any
just
questions, please either type in the chat or you can unmute
please,
yourself to ask the questions.
yeah, please do, please do. And again, I hope it was worthwhile for you to join me today. And I hope I was able to do justice to your time and everything so that you could really feel it out and see where can you put your money for safe havens and for getting some great returns. And just like you saw in this presentation, I'm very bullish on a lot of things, but in real estate, I'm bullish on senior living, some aspect of it. I just saw there is this space missing over here in between. But that's okay. The key thing is that hospitality, I'm really bullish on that because we are getting amazing, spectacular deals where lots of our investors have matured a lot and they say, Vinny, I don't know if I want to get the equity gains in 7 years and 5 years like the syndicators. And you have been telling me. So we are putting together a model right now, a fund, which will be for accredited investors only. And that's going to be taking their investment through regular means of PPM and everything, but they will get a straight cash flow of 10%, like I was trying to explain before. That will be 10 net at the end of the day, not 10 minus the 30% tax bracket. Now you are left with only 7. So we are putting that hybrid plan together that our investors will get 10, 11, 12%, or pref we call it, quarterly coming into their bank account. But then again, the key thing is by giving cost segregation, depreciation effect of negative on K1, it will balance it out so that the gain, which will be because of giving them the cost segregation minus, it will balance it out so that they can make the real 10, real 11, real 12. Let's just say that. We'll explain if anybody's interested. So again, thank you so much for meeting with me. Thank you. It's such a pleasure to be with you. And God bless you.
That's all for this episode of the Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.